If you think we're closer to the risk of recession than a risk of reacceleration, do you think the Fed needs to go 50 basis points in September?
I think I would like them to go 50 basis points, but only if they can message this as being part of a normalization, because honestly, rates are in the wrong place and they need to get to normal at a reasonably rapid pace. I think that's what they ought to do. But they have to message it that way, because the problem is that, as Steve said, if the Fed cuts 50 basis points and does it because they are scared of the unemployment rate going up too fast, it won't speed up the economy. It'll scare people. It'll cause people to halt business decisions. It will cause people to wait for lower rates before they borrow money. It will reduce the income for people, the $6 trillion in money market funds out there. So the problem is there's a J curve in monetary policy. When you cut rates, it actually hurts the economy before it helps it. And that's why they've got to be very careful here. Of course, the truth is they shouldn't be in the wrong place. They should never have raised rates as high as they did, and they should try to get back to a normal short run interest rate of somewhere in the range of 3.5% to 4%, and just stay there. But I do think that I think the employment report for August will be crucial here. I do think they ought to do 50 basis points, but I think they ought to try to message that as, look, the economy is fine. We're just getting back to normal at a reasonable clip here. We're not going to draw it out over a year and a half. We'll try to get back to normal a little bit more quickly than that. If they do that, I think they're managing the situation well.
Well, David, I guess what I don't understand then is if we're 50 basis points and we have more room for that, is that not sort of like an emergency cut? I mean, isn't 50 on its own something you wouldn't do if the economy is healthy?
Well, we didn't really have an accelerating inflation problem at all in 2022 and 2023. The inflation rate was coming down after June 2022, and we saw plenty of 50 basis point rate hikes. So I think the Fed has to sort of desensitize the economy a little bit, say, look, just don't freak out here. The big moves in short-term interest rates don't seem to have much impact on economic variables anyway. So let's just get back to normal. But it's a close call. I mean, the thing that I wish they'd started earlier, because then they could have started based on, look, inflation is steadily heading back towards 2%. We're very confident we'll hit 2%. We're going to take off the brakes here. They ought to start doing that earlier, because I agree that if it looks like they're doing this as an emergency rate cut because the economy's in trouble, that's only going to weaken the economy. So they have to be very careful in messaging. I think it should start with expressing some confidence based on today's numbers that the inflation situation is on the road to 2%.